All right. Hi, everyone. Today we will be having Jean Cook, the COO of Travel Nurse Across America, and Cyndy Jones, Director of Benefits at Travel Nurse Across America, which she also worked at multiple hospitals working in the same situation, and family members that are also nurses, so she knows a thing or two. They're going to join us in a discussion about benefits and insurance coverage, which is extremely popular in our travel nurse community. Every day I see the same questions about benefits, about insurance. So they're going to get on here, answer all those questions that you may have. And we're really excited to have them on here to help educate everybody about this topic. So feel free to ask questions in the comments. They will do their best to answer them all. So Jean and Cyndy, I will let you take over.
Okay. Thanks, Rachel, for that intro, and welcome everybody. We're so excited to be here for our second week of this three-part series to talk about benefits today. I want to also thank again the Gypsy Nurse for the great work they do in helping all of you out there navigate this unique world of being a healthcare traveler. As Rachel said, TGN sees a lot of, the Gypsy Nurse sees a lot of questions about benefits, and it's not just what does this benefit mean? It's how do you, in your unique situation of being a traveler, think about how to pick the benefits and how do you get the most out of them. So that's why we titled this Getting the Most Mileage Out of Your Benefits. And we want to talk about selecting them, how to think, what questions you should ask yourself as you select. And then we want to talk about how to best use them and go through with you the list of some of the most common and some of the less common choices you'll see out there, and describe what some of those are and the things you should think about in picking them. With that in mind, our very next, okay, of course, now that I said that, my slides aren't going. There it goes. So our very first slide is selecting and using benefits. I'm going to hand it off to Cyndy to talk to you, and she's going to start with why these decisions can be difficult.
Guys, it's a hard decision to think about today, what's going to happen 2 or 3, 4, 6 months from now. But they're difficult because, when you make your decision, you can't just turn around and decide on a change. So it's the decision is difficult. But what I always tell folks is, think about your history. If you have a large family, or if you have a family member that has particular chronic issues, always keep that in mind for the following year. What are my expenses going to be? What are my challenges? What do I feel like are most challenging for me specifically? Okay. Cost versus risk tolerance. This is a biggie because when you look at especially health insurance, number one that everyone goes to first out of the block is, what is my health insurance going to be? And I will tell you that the more you pay for your health insurance, the better the benefit is. And the better the benefit is relative from a standpoint of, if I pay more, I'm going to get more benefit for my bang for my buck, so to speak. If I'm paying a higher premium, then I'm going to have a lower deductible and I'm going to have benefits that kick in sooner. So if I don't want to pay a whole lot for my health insurance, I really am very healthy, maybe I've not had any situations in the past, then I'm willing to say, I'm going to look at a high deductible plan because I'm willing to take the risk. The only argument with that is to say, hey, do you have money in savings? Do you have a nest egg somewhere that you can tap into if you need to? Because insurance is, you're buying for the future, for the unknown. And if your risk is low, then you probably need to go with a higher cost premium so that you can have a benefit that kicks in sooner. You may have $1,000 deductible in an 80-20 plan, but if you pay a whole lot less, it may be, I may have a $3,000 or $4,000 deductible to meet, which means you're out of pocket everything until that deductible is met. Then you have insurance and you get to share with the company at that point, with your insurance company. So you really have to weigh what you're willing to risk when you look at the medical insurance, and that's the one that everyone keys in on. Okay, timing's important. You got to think about, do I have a surgery next year? Am I looking at physical therapy for some injury or ongoing chronic illness that I have. It's important that you understand when you can enroll as a new employee or ongoing open enrollment. All the companies have an open enrollment, usually in the fall to winter, and prior to the first of the year, usually. And being able to make those changes for your benefits. You can come on as a new employee and make a change later on as things change, but you know that you can't just come in and say, hey, I didn't sign up for dental before, but now I need it. You don't have that option throughout the year. So timing is important to keep in mind. If it's something you think you're going to have, that you look seriously into that coverage for that year.
Cyndy, before we move on, one thing from our traveler perspective too, and you could probably add on to this, another piece of timing is to understand across different agencies, what kind of insurance bridge or COBRA do you need to think of? Because you generally don't go, travelers, from one assignment straight to another one the next day. You've got some time period in between assignments, either just getting from one to the other or purposefully to take some time off. So understand what coverage you can carry from your previous assignment. You may be paying for it, but still, what coverage can you carry to cover that gap period in between assignments? That's part of the timing question too.
Sure. And COBRA is medical, dental, and vision. So other benefits you might be able to convert to an individual policy, but COBRA would be medical, dental, and vision. And COBRA is expensive because you're going to pay for the full price tag, but it is a way to extend insurance to where you don't have gaps in coverage. Good point. The unknown. Gee, how many times I've had conversations with folks that said, I had no idea I was sick. I hadn't paid attention. I was, not sleeping well or whatever, and they didn't know they were ill. Those are the things that we've got to consider. I tease about being an adult. Sometimes you have to have those hard decisions and talks with yourself about what is changing with me, and do I need to plan for, maybe an additional exam of some sort in the future. And if you're covering for dependents and for your spouse, the same thing there is just not knowing all of the, insurance is for the unknown, but always try to pay for as much as you possibly can afford, because in the long run, if you do have a really high expense, you're going to have a max out of pocket to reach with any of your benefits. High deductible plans are kind of like major medical plans from years ago, to where you have something, it's just not going to be as much as what you could have if you were able to afford more or decide to afford more. It's like your car insurance, having a high deductible keeps your premium down, kind of the same principle here with your health insurance.
Now, with any insurances, that pretty much goes. The lower the premiums get lower for two reasons, right? Either you've had a really good experience, or you're buying less coverage. So thanks, Cyndy, for getting us started on how to put those thoughts in the back of your head. These are difficult decisions. Give them the time they deserve. Don't just click down the list and pick because you feel like you have to. Think about how much risk you're willing to take on. Consider the timing or the situation you're in between assignments or whatever. And part of that risk is the unexpected. What if the unexpected happened? Would you go, well, yeah, I'm going to suck that up and pay for that because that's the choice I made, or are you going to be mad at yourself? So ways to think about which insurances you might want to pick and at what level. So with that background in mind, we're now going to move on to what are some of the normal and some of the less normal choices that you have to make. So insurance options, and Cyndy's going to walk us through first the health insurance type things that you are typically looking at.
Right. You normally have these items, these types of insurance, your medical, your dental, and your vision. And typically nowadays, companies are going to provide several options for you for medical, usually a high deductible plan. So your premiums are really low. It's kind of that major medical we were talking about. And then they usually have either an HMO or a PPO, a preferred provider organization, where you choose from a network of physicians. And that's going to be more costly because you're going to have more insurance at a faster pace because you are paying a higher premium. You're going to have copays, which is a set dollar amount to pay when you go to the primary doctor or the general physician. And then you're going to have co-insurance, which is when you share the insurance percentage. So once you meet a deductible, and most all plans these days have a deductible to meet, let's just say it's $1,500. Your $1,500 is going to come out of pocket, but with your copays, you're going to be paying that copay. But when you meet $1,500, it's going to kick into a co-insurance at that time. Once you have a co-insurance, usually 70-30, 80-20, to where the company pays, the company being insurance pays the 70% and you pay 30%. Now with the PPO, they're going to discount service costs. So those visits to the doctor, to the hospital, to the physical therapist are going to be discounted because they're part of a network of providers for a specific health insurance. So one of the things that I always advise folks to do, and I've done it myself, is to try to record what I feel like are certain things that are going to happen. I'm going to go, to my primary doctor for a physical. I'm going to go for the gynecologist. I'm going to do the mammogram. My husband's going to have a physical, etc. What are our prescription needs? And really map it out, because that's where kind of where I've been this year, and is this a usual year or is it a unhealthy year? Did we have some accidents? Did we fall, trip, hurt ourselves, etc.? Or was it pretty normal? And so that kind of gives you an idea of what your out of pocket has been. Then you can compare it to what the insurance would be based on today. If I had chosen this other benefit over the one I chose, how would it have paid? Then we have dental policies that are available. Most companies have at least one. We have two, and it provides you usually an upper and a lower type benefit. And many times they'll have orthodontia, usually just for dependent children. And there's usually a small deductible to meet. And then there's preventive services at 100%. And then normally based on service rendered, a 70-30, 80-20 type percentage approach to dental insurance. And it is a recurring benefit. So every year you keep it, you get another $1,000, $2,000 available to you for usage. So a dental plan can really be a great supplement to medical issues going on with you, and is always something you need to consider. Those twice a year teeth cleanings for everybody and good dental health can really make a difference with folks. We have a vision insurance, and vision is just for those materials usually, because most medical plans do cover the office visit, glaucoma check, just general eye health. But a vision plan normally will cover either contact lenses or eyeglasses once a year. So those are options that are available to you to consider, and usually are kind of the hub of the insurance world. Those are things that really are a main focal point for most all employees. Okay. Lower the cost, the less the coverage. Just got to think in terms.
Yeah, and people probably at this point are feeling a theme.
Yeah, probably.
Maybe we should just say that's purposeful that you're feeling this theme.
Yeah.
We can't tell you your individual situation. We can't tell you how risk tolerant you are. We can't tell you, none of our business, what, if any, medical issues, dental vision you have or you have coming. We're just trying really hard to have you think about all those things. Give it the thought it deserves, and realize that lower cost is less coverage and higher cost is more coverage in most cases. And where are you comfortable with that? There's financial impact. There's Stress impact, there's some emotional of, yeah, I'm willing to take that risk. I need the money to pay my student loan, or I'm not a risky person. I need the coverage. All of those are valid reasons to pick what you pick.
Exactly.
All right, Cyndy, we're going to go into some of the safety net type insurances.
These are the ones I really like, because it really is where folks get creative. You know, Jean and I are different people. We have different home lives. We have different situations in our life, and we're going to approach these differently. You know, life insurance is usually covered as a percentage or a dollar value for employees of an organization. And you normally have, and in our situation, you do options to where you can buy up, you can pay for more than what the company provides, and it's going to be at group prices. So your rates are going to be better than if you go out and contact State Farm and say, I need an individual policy. You can also buy up for your spouse and children under the age of 26. You can buy usually. So those are good benefits for you. And again, group rated. So it's going to be at an affordable price. It's going to be coming out of your paycheck, and that's always nice. You don't see it, so you don't have to worry about another bill. And part of what we deal with every day, and folks being travelers, we know y'all are kind of adrenaline junkies. You know, you get into travel, you get into adventures, and short-term disability is something I want to talk to you about, because I can't tell you how many I talk to that say, you know, I was rock climbing and I fell off a ledge and I broke my ankle, and I need to buy short-term disability now. And I'm like, well, that would have been good last week before this happened, because now you have a pre-existing condition. So my takeaway here for you is, you know, if you are an adventurous person, you're out there doing a lot of physical things, or you, as a traveler, you drive. You know, you go from site to site, assignment to assignment, and normally are in a drive mode. So short-term disability is something to consider. Most policies have a short elimination period. Ours is 2 weeks. And then it kicks in, normally pays 11 or 12 weeks. And then I've got long-term disability right here with it, because that's a automatic handoff. If I'm not able to return when short-term ends, long-term kicks in. And long-term disability is really for those serious health conditions. Let's just say I had a car wreck and I had a serious condition after the car wreck, and I had to be off for 6 months. That long-term disability can kick in and keep my income steady during that time. Now, it's not going to pay 100%, it's going to pay 60%. And short-term pays weekly and long-term pays monthly. But it is a way to help fund lost income to the household. So always really affordable benefits, and it's something you should really consider. A disability policy can keep the car going, can keep, you know, student loans being paid, can keep, you know, a house that you're paying for in your permanent residence going. So those are things to consider. Along that same line, accident insurance. That's an insurance directly tied to an incident of an accident that causes an injury or a condition. And a good example is my rock climbing idea there. I'm climbing a rock, climbing a cliff, and I fall and I break my ankle, or I hurt my rotator cuff. Do I have income set aside for weeks and weeks without an assignment? And an accident insurance policy, as long as you've had an accident with an injury of any sort, it's going to pay. And it's going to pay based on what's happening with you. Is it physical therapy? Is it a surgery, doctor visits, so on? So it helps keep income coming to the household while I'm having services rendered for being sick or being injured. Accident insurance is a wonderful option for travelers to consider. Then we have our more extensive cancer and critical illness. Again, money coming back to the household. So if I have a family history of cancer insurance, which I do, I took cancer insurance when I came to TMAA because I thought, you know, it's worth it to me to have that extra safety net. And so what that does for me is, first of all, it gives me a wellness benefit. So if I go and do my annual visit, I can get $50 back, which helps pay for the premium. And then I have that safety net of, if I have a cancer diagnosis and I start receiving any kind of service rendered, then my physician visits, my surgeries, my chemo, my radiation, my visits to and from the doctor, if I'm having to drive to a location, they actually can pay travel. So there are a lot of positives to the cancer and critical illness. You can provide that for yourself, for your spouse, for you and your entire family, and it's very affordable. We also have a benefit called legal and identity theft. And basically, I think of legal as, hey, I can make my will, I can do a trust, I can do all those things that maybe as a responsible parent or adult that I feel like I need to do for my financial security. And then identity theft. Wow, that's a big topic these days. Almost every day I have something that comes through on my phone that I know is somebody trying to scam me. It's was it phishing they call it now? One of those, beware of these emails. I just think every time I see it, is that somebody that knows my identity? Or are they phishing for me to suck it up and deal with something that I shouldn't be dealing with? But identity theft is one of the number one things that employees deal with every year. We have numerous days that people are having to be off work to go deal with legal issues. So this is just kind of a legal, what you would consider an HMO type of approach. It's just a way to have somebody be there on your side, help you with all those legal matters that can happen from year to year. And our very last one, and I think Jean and I would both agree, is our favorite benefit, is the pet insurance. We are nuts about our pets. We love our puppies. But if I had a kitty, I'd love it too. But we have two different kinds of pet insurance. We have a pet discount program for the veterinarian, so that if you go for all of the annual visit for your dog, teeth cleaning, if they have any kind of medical condition throughout the year, you can go, and it's, I think, a 25% discount. So that's nice. But then they also have a pharmacy associated that you can purchase separate that we have. And that's the one I personally use. And I will tell you that I paid for heartworm and flea and tick, and it was $36 for 6 months for my Beagle rescue dog. So I've got to tell you, I think pet care is wonderful. And we know as travelers that y'all are traveling with your pets. Those are your kids. They are ours as well. And I take mine everywhere I go. So pet care is an important benefit. It's kind of a fun benefit as far as we're concerned, because it is something that not everybody takes, but is extremely popular. So I'm going to turn this over to Jean to go next to our financial.
Yeah, I just had one of my pets clawing at my leg, wondering why she wasn't in my lap right now.
In your lap.
Yeah. One thing to talk about with insurance, any of these insurances you can go get as an individual. You could go on healthcare.gov. You could get some dental, some vision. You can go buy life insurance. The Aflac Duck can get you the accident and the cancer, and you can do, there's multiple folks you can go get legal and identity from. Whether your agency has these that you can contribute right out of your paycheck, or whether you decide you might need some of these to go get on your own, we want to make sure you understand the things you should be considering. Generally speaking, if you can get these things through your agency, they're going to be cheaper because we're buying it in bulk to cover a bulk of you, and therefore we get a discounted rate versus if you went and bought it as an individual. Not always the case, but pretty much always the case. In addition, if you buy one yourself, you don't have to worry about agency to agency to agency. It's stopping and going. You have it forever and ever, amen, under your own name, and you can go work wherever, and it's your insurance. So another couple of thoughts to think about that cost issue and the portability and timing. If you're a traveler that likes to bounce around between agencies more, it might be worth a little bit more expense for you, especially on some of these safety net ones that are cheaper, to just buy your own and not have to fiddle with that in and out stuff as you move between agencies and assignments. So something to think about as you decide what to pick. Okay, on to everybody's favorite, the financial side of things. Not everybody's favorite. So retirement savings. We all hope to retire someday, or most of us do. Yay, yeah. Applause for retiring. Okay. There are two kinds of things to think about, a 401k or an IRA. And within 401ks and IRAs, there are traditional ones and there are Roth ones. So let's talk about what traditional and Roth is, and then we'll talk about 401ks and IRAs and their pros and cons for you all as travelers. So a traditional 401k or IRA choice means that you do not have to pay taxes on your contributions to that retirement savings vehicle when you put the money in. So those are pre-tax or tax deductible contributions. So you don't pay taxes on that money when you put it in, which is today, and you will pay taxes on it when you withdraw it upon your retirement. So what you're betting on there is that your tax rate today is higher than your tax rate will be when you retire, because you're making more money now than you will then. And so you can avoid paying 25 to 33% or whatever it is on it now, and pay only 20% on it later. A Roth IRA is the exact opposite, if you will. You're going to pay taxes on it now when you put it in, but you're not going to pay taxes on it when you take it out. Many people, as Cyndy will tell you too, many people will split their choice, some in traditional and some in a Roth. That's a way to sort of diversify your, another way of diversifying your retirement portfolio and retirement income so that you can maybe get the best of both worlds. If you're pretty sure that your tax rate now is going to be more than later, you want to go traditional. If you're pretty sure the other way around, you're going to want to go Roth, and you might want to do some of each. Just like we don't know your medical issues and your risk tolerance and et cetera, we don't know your financial situation either. It would therefore be ill-advisable for us to try to say, oh, you should always do this, because there's so many varied situations out there with all of you. We highly recommend you have an investment, somebody you trust. Even if you only go see somebody for 1 hour just to help you with this one decision, it's worth finding an advisor who can help you figure that out. So let's talk about 401ks versus IRAs, what the difference is, and how that applies to you all as travelers. So 401k, the 401k is offered through your agency, through your employer, and the contributions are made through payroll. So you're going to tell them, I want to put X percentage of my pay or X many dollars of my pay into a 401k account. So all you have to do is tell them what to do, and they're going to make it happen. The contributions are made through payroll, and in many, but not all, the employer is matching what you contribute. So here at TNAA, we match up to 4% of you putting in 5. So if you put in 5, we'll match 4% of your salary in there. So you get not only your money put in there tax-free, but we're going to put some money in there for you too. Not all employers do that, and it's at different rates. That's one of those things to ask and make sure that you know. So good pros in that all you have to do is tell us what to do, and we'll do it, and you might get even more money out of it with a match. The con on this one is the portability across employers can take some effort. So if you leave and want agency A to go to agency B, you've got some paperwork and some work to do to get your dollars that were over here in A moved over to B. Or you could end up with multiple 401k accounts from different agencies and different employers. That's okay to have the multiple accounts and etc., but it does take a little more effort and time on your part to keep up with those, make sure you don't lose track of anything. And if you're one of those people that likes your retirement and your financial stuff tidier, that might be a consideration for you to think, oh, I don't know if I want to go the 401k route. IRAs are different in that, similar, we talked about insurance, you can get it through your agency or you can go buy your own. An IRA, you go set up your own IRA account and it's yours forever and ever, wherever you work. So you set it up at a financial institution, bank, savings and loan, the Merrill Lynch's, Banks of America's, I mean, pretty much anywhere that you currently have a checking or savings offers or an investment account offers an IRA opportunity. One of the ways that you can get money in there is you can direct deposit some dollars from your paycheck. Pretty much all agencies offer you the opportunity to direct deposit your paycheck into multiple accounts. So you could put some of your pay into checking and you could put some into your IRA account and that way sort of cover the same thing as contributions made through payroll. You're just putting it over there so you're not tempted to spend it somewhere else, right? Another pro of this one is you have no issues if you move between agencies. We don't even know if you gave us your 2 bank accounts to put money into, we're not even going to know that one of those is an IRA. That's your account and you're putting money in there when you want to. The con is, or the difference is, the tax dollars are recouped when you file your return versus with each paycheck. So a 401k is considered a pre-tax contribution. You don't have to pay payroll taxes and income taxes. If you're going with your traditional one, you don't have to pay the taxes on that when it goes in. So the taxes aren't taken out on that earnings when you put money in the 401k. On an IRA, you put money over there, and then when you file your tax return, on your tax return, you say, I put this amount of money in an IRA, and it takes it out of your income and you pay less tax later, or maybe even get a refund depending upon where your situation is. So let's just think about those comparisons one more time, because I know this one can be a lot to get a hold of. So with a 401k, you make your contribution through payroll. If you've chosen traditional, it's not taxed, but you may have more administration than some people like in keeping up with multiple accounts or getting those dollars moved around if you're moving between agencies and employers. With an IRA, it's yours forever and ever. No worrying about moving it around. You can direct deposit if you choose into it. So you get rid of the whole issue of between agencies, but you will pay taxes on it. Taxes will be deducted as you earn, but at the end of the year when you do your return, you're like you get to take that credit and potentially get some money back or have that go against the taxes you owe. So what does that all boil down to? To me, it boils down to one sort of simple thing. If you go with an agency and you stay with them most of the time or for several assignments, a 401k is fabulous because you have the potential to get the employer matching, and you're not going to pay taxes up front on a traditional. If you're a traveler that likes to move around between agencies, you might want to consider an IRA, especially if you're not a person who likes a lot of keeping up with stuff in administration. Those are kind of the 2 underlying things for you to think about as you choose. Some people do both. Some people will have a 401k with the agency they work with most, and then they have an IRA that they put money into when they're not with that agency they work with most of the time, when they happen to hop over to another agency for some specific adventure. So you might think of it that way too. Cyndy's an adventurer. She's probably a rock climber herself. She keeps using that example. It's probably because she rock climbs. If I
rock climb, but I do hike. I will. I will fish and hike and do boating, but I don't.
There you go.
But I
Is there any-
appreciate those that do.
Yeah, exactly. Exactly. Is there anything, Cyndy, you think on 401k or IRA that you would add for folks to think about?
Did you clearly define what Roth means? Maybe a
I
question.
think so, but it is
Okay.
confusing. So at the risk of repeating, let's do that. So traditional IRA, you don't pay taxes now. You do pay taxes when you take money out of that traditional account later in life when you retire. A Roth IRA is the exact opposite. You pay taxes on it now as income, but when you take it out of that account later, it doesn't count as income and you don't pay taxes then. So that gets back to think about if you think your tax rate is going to be higher now, then you want to go traditional. If you think your tax rate's going to be higher when you retire, you want to consider Roth. And many people do some of both just to limit the exposure to being totally one way or the other.
Yeah, I think that's good, Jane.
Yeah. And financial advisors abound out there in the world for you to get advice from.
Yes,
Please find one of those. They're very important people to have on your team. A good tax accountant and a good financial advisor. I recommend everybody have one of each of those on their team.
There you go. Good.
Other benefits. There's other stuff, right? Besides your insurance-y things and your retirement things. There are other things for you to think about. So many agencies will have some sort of an employee assistance program. These things can vary pretty widely on the kinds of things that are included in them. But generally, the very basics of an employee assistance program is that they can help you with very basic legal questions, and or they can point you towards a reasonably priced lawyer if you go beyond their included free services. They are a concierge, if you will, to help you find mental health providers, to help you find a legal somebody. They're 24/7. So if you have some sort of an emergency situation that isn't call the police, but you need help, they're there for you. So find out if your agency has an employee assistance program and read the quick brochure on what it covers. Because if you need it someday, it will be in your head from the memory of having read the brochure or read the online thing of what it covers, and you can call them.
And typically it can be for not only yourself, but your spouse and your dependent children as well.
Exactly.
It usually opens up to the whole family. Sure.
Yes, it's usually the whole family. So just know what's included. Yeah, if your agency has an EAP, know what's included in it so you can take advantage of it. Maybe not take advantage of it, but have it be there for you when you need it most by knowing where to call and who to get a hold of. Sick leave. Sick leave varies across agencies. Some agencies provide it only in the states where you have to. Some agencies provide it no matter what state you work in. Some agencies have limits on how much total you can earn. You might earn different amounts per week. You might have different limits on how much you can take every year. But sick leave is an important thing just to understand what the rule of the game is where you are, so that you will know what sick leave you have available and how to use it. Because at the point you get sick is not when you want to try to be reading a sick leave policy and figuring out how to use it. One of the things that Cyndy and I talked about in preparing for this, and we talked about this last week in our compensation discussion, different agencies have different business models. And with those different business models is different levels of service. So there's everything from the company where you do most of it online and you do a lot of it yourself and you might get paid more, to the agency that does seemingly almost everything for you and is there for you 24/7. All of those and anything in between are legitimate, viable business models and legitimate, viable agencies for you to consider. Again, depending upon your risk tolerance and the service level you want. So think about that as part of your benefits too, is how much help are you going to get from HR, help with housing, clinical team support, Are you a very experienced traveler and you need less of that? Or are you new? Or are you a very experienced traveler, but you just like having the help? Think about the agency support teams as one of your benefits, and choose agencies and assignments based on that, how much help you're going to get and how much that means to you. There are also a couple of wage protection things. Cyndy and I and well, lots of the HR and other team members at our agency get a lot of questions about workers' comp and unemployment. Those are wage protection type items. I'm going to let Cyndy speak more to them because she knows even more about them than I do, because she is the queen of these sorts of things.
Oh my, I love being a queen.
Workers' comp, I'll just talk about the outside edges or the very top tip of the iceberg. Workers' comp helps protect your wages when you've been injured or made ill at work. Right. If you are injured or ill not at work, workers' comp doesn't help you. If you are injured or ill because of work, workers' comp is there for you. There are rules around applying for it. There are determination periods where you file all your information and they say, yes, you have a legitimate claim, or no, you don't. Understand that having your agency or the workers' compensation insurance carrier for your agency help you through that process will be important. Unemployment is for a time when you are unemployed, no fault of your own, and you can't find somewhere else to go to. This one probably rings a bell for some of you with COVID this year more than it ever did before. There were certain specialties who thought they would never be unemployed that suddenly were for their first time, and they couldn't find somewhere to go. And they might have gotten termed early from an assignment. Unemployment is very different state by state, and you will need to file for unemployment in the last state that you worked in. Not the state you live, not the state you happen to be visiting your mom in, but the last state that you worked in. And that can confuse people too. They think they should do it based on their home address or where they're sitting right now or where their next assignment is or something, but it's the last place you worked. So workers' compensation, hurt or ill at work, unemployment, laid off, can't find anything, no fault of your own. So Cyndy, what did I say wrong with any of that? Or what other advice do you have for travelers on those two things?
You didn't say anything wrong, but workers' comp, I guess the key component there is to be timely with your filing. You've got to reach out. Most of the time, if you're injured or exposed at work, they're going to be sending you to the emergency room to be tested. That happens most frequently in our settings. So usually you're checked out immediately. If it's an exposure, sometimes they have testing, sometimes there's prophylactic medication and procedures to go through. It depends on the scenario. But if you're, let's just say you lift a patient and you strain your back, they're going to check you out and make sure there's nothing immediate emergent that needs to be done. Many times they'll send you home to rest with a follow-up somewhere else. And in our settings right now, a lot of the urgent cares and so on, especially in a travel situation, is somewhere that you would go. But for the most part, very important you have immediate care, that you're reaching out. You find out from your agency who your workers' comp carrier is. There's always a 1-800 number. They're always 24/7. They're going to be there for you to report that. They normally have a nurse triage 24/7 so that when you call, they can take that report and get things started. There's normally a waiting period for wages to start if you're off work due to an injury or an exposure. And that carrier is going to take you all the way through that. And you're going to have someone at your company that most likely is managing the workers' comp so that we're getting you the care you need back to work as quickly as possible. So workers' comp is a protection for you. It is governed by a lot of different agencies, and there's some states that are very, very unique in their workers' comp, but we're on top of that as an agency. Your agency is going to be the same. And, workers' comp is our main focus is always to get the traveler back to work and to do what we need to. If you were on our clock and you were injured, you're our responsibility. We need to make sure that we do everything we can to get you back as whole as possible to your position. Unemployment, Jean said it very well. Certainly, nurses do not think in terms of unemployment because you always have something to do. But with COVID, we saw some real unique scenarios. And it is difficult to switch gears and think in terms of not being employed for a period of time. And during COVID, it was definitely different than the norm because they were streamlining and speeding things through because of just the concerns in the United States. But normally unemployment isn't quite as voluminous as it's been since COVID started. It is wherever you worked in the last quarter that you're going to be filing. So if you're brand new in a facility and you're sent home only a few days in, you're going to be filing with your previous assignment in the state that you worked. So sometimes it is really difficult for someone to help guide you through all that. For the most part, it's going to be based on where did you work in the last full quarter of time. That's the state you're going to file with, and that's where you start. And I will tell you as a agency employers that we were speeding those processes as quickly as we could to answer the requests. No one was holding anything up. It was just a backlog based on volume. And that normally isn't the case. So I will just say that COVID has definitely been, everyone calls it the new normal. Hopefully it's not, that we can get back to more of what we consider normal in the future. But we've certainly had some challenges that we've not experienced in the past.
Yeah, these wage protection items, they've always been there. And there are always nurses in certain situations, or people in general, not just nurses, people everywhere that have needed them here and there. But yeah, COVID was a whole new world for both of those. I think one of the things that we find will be interesting, and we're intrigued to see what happens, is what does the COVID experience maybe do to the workers' compensation and unemployment of the future? We feel like for the most part, they're probably going to go back to what they were before, at least most of the way back. But there may be a few things that were learned that could stick in there about some of the processing, expediting, or some of that stuff could stick in there. It will be interesting to see as time goes on. What stay, if it goes totally 100% back to exactly what it was, or maybe not all the way back to that, but with a few tweaks for the positive. So I am not seeing any additional questions at the moment, and I think Cyndy and I have covered pretty much everything we wanted to. So I'm going to do just a couple minutes of wrap up and allow Cyndy to do that too. But if you have any questions, please pipe in the comments so that we can address those for you. We'd be happy to do that. Again, I'm going to say there was a theme today, and there was a theme to today on purpose. We had a purposeful theme that we want you to take some time to think about your benefits. I know that when you change jobs or you go in and out, even within the same agency or not, you feel like, oh God, I got to go through this enrollment thing again. And you do. But do think about your situation at least once a year very carefully. Maybe at open enrollment, you make yourself think very carefully. And then if you have to enroll again somewhere for a job change or something, you can say to yourself, is anything different now than it was when I thought through it carefully? But please do think through it carefully. Think about your risk tolerance. Think about your individual situations. Give it some really good thought at least once a year so you can pick well and you don't have the oh crap moment. Because you just, Cindy's gonna laugh at me. You don't want the oh crap moment.
Oh my, visual.
So, yeah, visual provided. So think carefully about it at least once a year, and make sure you select well for yourself so you don't have regrets on that later. And another thing I would tell you, and I alluded to it on the EAP, print out the short list from the screen or save a screenshot on your phone of the contact numbers and your policy numbers or whatever all that is for the coverages that you've selected. Most of the time when you've selected, you're going to get some sort of confirmation summary sheet. Take a snapshot of that and have it on your phone, print it out and stick it in your wallet or something, so that when the bad happens, not when, knock on wood, if the bad happens, you're not in the midst of needing help trying to figure out who you're even supposed to call or what your policy number is. It takes a couple of minutes to save and have that info up front. And in the midst of a 10 o'clock at night bad thing happen, it might take you 20 minutes to find who you needed. And those 20 minutes can be important just to your psyche, if nothing else, when you need help. So make sure that you know how to get a hold of the folks that you might need to get a hold of in your coverages, and just have that info with you. Cyndy, what else would we want to say in our wrap up for folks?
I think I want to say, remember beneficiaries. They're important. Sometimes something changes in your life. You may have left life insurance to a significant other, and then that significant other isn't in your life any longer, and you forgot. So it's always important to just once a year go in there and make sure that your beneficiaries have been updated and they're current. Think about things like, if I have an underage child, they're not going to pay a beneficiary payout to an underage child. They're going to hold it in a trust until they turn 18. So if there is someone else that would be taking over as custodian of an underage child, you may consider leaving a portion of life insurance to them for their custodial support during that time, depending on, of course, when life insurance would be claimed. Terrible topic, and you don't want to think about it, but it is something that we, as needed, we deal with, and we always encourage folks to be timely with beneficiary changes. Also, you have life events that happen. You get married, you get a divorce, you have a baby, you adopt, your spouse comes or goes on insurance. There are things that can affect your insurances during the year in between enrollment. So reach out to your HR department and ask those questions, because it's real important you keep current, and you're going to leave things on the table if you don't. So it's real important that you're just asking those questions. Hey, I had I adopted a baby. What do I need to do? What can I put them on? And those are the kind of questions, you don't need it until you need it, and you don't think about it until then. So it's good that you have that dialogue and that relationship with your HR department, so that when the time comes, they can help direct you through that change in your life. We've enjoyed our time with you, and hope that if you have questions that you'll reach out.
Absolutely. Thank you, Cyndy. So valuable to have Cyndy's many years of experience to help travelers. I am honored and pleased to have been of some service today. And one more time, thank you so much to the Gypsy Nurse for everything they do for the travel nurse community, giving you that community to share, and all of the resources that they provide on their job boards and their housing boards, and all of these webinars of information that they provide for you. So thanks all, and use your agency, use those enrollment brochures, use research, use your financial advisors, get yourself a team.
And here's Katie.
Well,
Hey,
thank
Rachel.
Thank you so much, ladies, for coming on. A lot of great information. So we look forward to having you guys on again. I believe next week we have another session on, did you decide your topic?
Housing. Yeah. Same bat channel, same bat time next week. You can join myself and Ashley Graham, someone with 20 years of service to travelers in the housing industry.
Nice.
We're going to walk you through some of this, some of this same sort of thing. What to think about, how to plan ahead, how to have the best experience from a housing perspective.
Well, definitely needed. So we will see you next week, and thank you again